Hey, good afternoon, friends. Hi, welcome you all to our another knowledge session by the Digital Fifth. We'll wait for a couple of minutes to more people to join in. People have started joining into the session, so we'll take this time for others to join in, and then we'll get started. Thank you again. We'll wait for another 1 minute, and then we'll get started. Hi guys, again welcome you all to our another knowledge session. So this is another knowledge session from the Digital Fifth, and let me just bring up my screen and then we get started. Okay, guys. This time we picked a very interesting and tough topic, right? So we're just trying to look into that what's happening in the home loans, especially more from the digitization perspective. And as we keep on always talking about that, this knowledge session is not only that one way knowledge sharing, right? We also learn through you. So hopeful to learn from you guys also through your questions or through your inputs. So feel free whenever you need to have ask any questions or you want to share your insight from your experience. Please use the Q&A sections of the Zoom, and then you can talk about it. Or we will time to time will open a forum for the discussion. So that's why that so we'll try to get into that home loans, that try to unravel that how the digitization of home loans is evolving. So before that, just quick introduction from my side. As I worked with L&T and Wipro, where that primarily I was mostly into technology and risk advisory side of it. And then I worked with DCB Bank almost 8 years, where I was handling that digital banking, open banking. Then also as well managing the infra along with the governance, where that I deployed lots of the digitization and that run the various digital transformation programs. And then I joined Samir, who started the Digital Fifth. I'll talk about the Digital Fifth in just another 2 minutes. And then I joined and taking care of the consulting assignment, working very closely with the banks, NBFCs into their digital transformation, technology transformation. I've been joined by Pezan Dolasha, who will be helping me during the sessions to guide you through the different nuances of the home loans. So I'll just request Pezan to do a quick.
Hi everyone, my name is Pezan Dolasha. I work as an associate consultant with the Digital Fifth. I've been associated with the company for the last 1.5 years, where I've worked on multiple assignments and into program managements and also benchmarking of journeys. Currently, today we'll deep dive into the home loan market, understanding as to what are the customer pain points. We'll untangle the entire HL journey and navigate through the key regulations that are there for the home loans.
Yes, thanks, Pezan. Thanks for also talking about the agenda. So, guys, let's get started. Before I just go talk about the get into the topics, let's many of you know us who we are, but many of you are joining for the first time. I could see that. So for those, so we are ACES, you can call it as the first fintech and digital consulting firm, very focused on the BFSI segment. So our core area is in the banking and the financials industry, and purely into the digital and technology advisory. Right. We also organize Bharat Fintech Summit and. We also provide lots of the corporate trainings. So this is just on the numbers. I'll just move ahead. So we provide the consulting services where that we work with the banks, NBFCs, fintechs, as well as the technology firm into the various advisory services. We do lots of work in the partnership, either on the fintechs or the tech startup looking for the kind of the market outreach. We work very closely with them, or any banks or the NBFCs looking for a fintech partnership. That's where that also we play a role to as a matchmaking kind of a player. And then we do lots of the corporate training where that we provide the training services on the digital banking, open banking, industry trends like the ONDC, account aggregator, risk and compliance training. And then we primarily work on the trainings for the boards, senior management, the middle management layer, right? So that's where that our expertise lies. This is just a snapshot of our customers. So we have worked a lot with the banks and NBFCs and across the areas. Or most of the learning and the knowledge session, you will see that it's coming from our consulting assignments that we try to bring it to the forum through the knowledge sessions, right? And then we play on our market. So many of you may be already receiving our newsletter. If you are not receiving newsletter, please go on the website and you can register where that every week some of this deep content newsletter that you will receive. And we continue to publish lots of the blogs, reports, industry reports, or recent reports on the enterprise B2B fintech is available on the website that you can go and download. It's a very deep report on the what kind of the technology platform side of the development is happening between the banking tech, lending tech, payment tech. So that's where that you can get into that. And this is just a snapshot of our training services. We also have run our online training programs, which is like you can go in the subscription base where that you can attend the various training programs available that you can just subscribe and you can go through at your leisure time. So happy to see you on the fintech grades. So that's where that just for your introductions. I'll not get into that. Let's get into the topics directly. This is again the Bharat Fintech Summit. Okay, so now let's just come to the topic itself. I think I already told, home loan is a very complex area. Why is it complex? Because as compared to the personal loan or unsecured business loan or some of the liabilities, the kind of the digitization that we have seen, we've yet to see that into the home loans, right? It's not easy. It has its own complexities because of the physical substance attached to the whole of the process, like which is your home. So let's see that what's happening. If you try to understand the lending market, like historically, if you try to see, and that's where that you will be able to appreciate that how the home loans is transitioning. So if you try to look at the personal loan, like 5 to 8 years, 10 years back, if you try to look at the personal loan where it was, that it still used to take 7 and 10 days. Like you talk to the bank and then you fill up the forms. And forms also used to be like 10 to 12 pages where that multiple signature has to be done, right? And lots of the manual intervention, like you take out the banking statement, the salary slip, all the printouts and give it to the agents who will come to your home or you go to the branches, right? So it was average at 7 to 10 days of a cycle, provided that your every documentation and all the information is sufficiently available. And that too also you're a salaried kind of the guy, then also 7 to 10. But if you're the sole proprietor of business, then complexity continue to increase, right? And cost of acquisition used to be at a much higher, much higher. And if in case if you are working with a DSA, then it goes more, it used to go much higher, right? And that's where the challenge was there, that it was very difficult to give them small personal loans, like say, for example, 50,000 or like 1 lakh, because the cost of acquisition itself was very high. So typically bank used to prefer like 2+ lakhs kind of the loans, right? So that was the challenge which personal loan used to see. But I think many of you would have experienced that that scenario has completely turned around almost 360 degrees, right? Today is the personal loan. I'm not getting into that RBI interventions to reduce the personal loan, but focus is more on the look into the technology aspects, right? So personal loan, now you can just go apply on the mobile or the internet and you will be able to get through the loans directly dispersed through the 6 to 10 minutes, right? And that's why I'm talking about purely about the NTB. For the ETB on the pre-approved, that's also more much faster, right? So TAT has come down to 6 to 10, where that you just need to go through some of the screens. Manual intervention almost zero, where that there is no person to help you to what are the information that need to be collected, what that signature has to be done. No, right? It's all the electronic signatures based agreement is getting done. All your informations are through access, like either through statement analyzer or through the account aggregator. You can pull the entire the bank statement. So no need to take a print out of the bank statement or download the bank statement, upload the bank statement also, right? But still there are cases. I'm not saying that this is a completely all the banks, all the NBFC has that ideal situations, right? It differs from the banks to bank, but largely that where the industry is already has moved. The bureau pull, like it's now one click that you can entire pull information about the your entire the credit score, plus that what are your outstanding, what is your ongoing liabilities in terms of the EMIs and all this thing. Every information is available. Your entire the KYCs, the video KYC through the PD discussion has to be done. And then a whole mandate signing is also like very much digital. Like either you can do the Aadhaar based mandate signing or debit card or the internet based mandate signing rather than filling out the forms. So it all has been done, and now the cost of acquisition has drastically come down, which has allowed the many of the lenders to go for the small ticket loans like 30,000, 50,000, 60,000 of the loans also being given to the individuals, right? That's the transition personal loan has seen. But has this seen in the home loans? We'll subsequently see that this is very far from the reality, right? Why it has been able to possible, if especially I'm talking about the personal loan and to a larger space into unsecured business loan also for the some select areas like, say, for example, sole proprietor and some of these things. Unsecured business and no, has not been completely digitized across all the product, but yes, maybe 5 to 10%, 20% has able to achieve. But it's all has been possible because of the kind of the data has been made available in form of the APIs, right? Be it you're talking about that entire information, your transactional informations through credit bureaus, your KYC information through, and especially on the business side, like Udyog Aadhaar, MCA informations like your ITR and all this thing can be pulled up. Your bank statement, transactions data, loan data, everything is information is available, right? Then also that your GST, income tax related informations, KYC verification like Aadhaar, PAN can be done. Some of this non-structured data, which is like, say, for example, with, not in form of the bank statement or the GST, but where that you can try to understand the behavior of your borrower much better, right? Those data is also available like in form of the SMS call history, app usage, like your internet browsing. It's try to create digital is allowing you to create a persona of the individual, that whether the customer has that intention to pay also. So from the underwriting principle, if you look at it the earlier, which was primarily that ability to pay, now the ability to pay has been added with an angle of the intention to pay. So some of this unstructured data through the internet browsing behaviors, your payment behaviors and all these things start pointing towards that intention to pay. And this combination has helped a lot to digitize that lending services, right? Especially on the personal loan. Now let's look at the home loan side of it, and we try to get more into, as Pezan was talking about, we'll try to look at the more of the challenges in the personal loans. So look at that. What are the challenges? Like one is that definitely TAT is still like even best of the best entity. If you try to go and apply for the loan, it's still take 20 to 25 days in spite of after finalizing the property in a already what do you say, established developer that you will try to buy in Bombay, right? I was just one of our colleague was buying a home loan in recently, and it took almost like 25 days to get that money disbursed, right, from the day of applications. The cost per loan is very high. Number of documentations goes immense. When you say talk about immense, even you will have the salary statement. They'll try to look at that. Okay, your partner's ITR, your other home side of the overall incomes. Lots of more documentation start coming into the picture. Lots of the manual interventions, like not only from the builder side of the documentation that you will require, but also from your individual side of informations. Then your agent support will require regularly that what format the information require. Lots of the signature that need to be carried out, right? Where that customer experience become a much challenge, right? The customer experience is continue to go down because if you have filled up some information, you have signed up almost like I can tell you that 50 to 60 signatures on any home loan application will be standard that you will try to go through it. Many of the entity, what they have done that while the physical leg of the documentation flow, the collection has still been there, they try to create a digital interface also where primarily to track that whole of the flow, where that customer has to go through the process of the filling the details again on the online, while he continue to fill on the physical forms, upload that all the documentation, whatever is available through the online, and then hassles of the multiple OTPs and all this thing that has to go through that. So the challenges has been still that largely across all the leading banks or the NBFCs maybe remain the same. Some places some are able to sort it out, some places they have not been sorted out, right? So cost of acquisition is remained very high because of the days, like say 20 to 25 days, banks is involving multiple agents or the sales staff into the whole of the process, the system interventions, the cost is very high. If the DSA is there, then additional layer of the cost goes into the whole of the picture, right? What would be the ideal, right? I'm not able to show the way I could able to show in the personal loan that what is the reality today of the 6 to 10 minutes of loan. I don't think I can claim into that because the lots more are yet to happen. In fact, most of the things yet to happen in the home loans. But what could be the ideal condition? Can you get the pre-approved properties for the home loan in a day? That's a task can be attempted. Yes, it can be possible, but it will require lots of the rejuggling of the processes, tax arrangement, right? Which will definitely can improve the cost per loan, right? Productivity definitely, if you are able to do one pre-approved properties in a daytime, or for the new properties, like say for example, where the banks has not identified and approved the properties, but if any new customer comes with one property where that he want to take a loan and which is not in the pre-authorized structure from the banks, can the TAT of the 2 to 3 days can be done, right? If these two things happen, definitely it will have a dramatic impact on the whole of the home loan processes. And not only in the home loans, but it can be extended towards that any mortgage loan, like loan against properties for the business and all these things. So also it will go through the dramatic transition shift. But I think it will take through the time. We'll try to understand in subsequent slide that where the intervention is required, where some intervention has already taken place, and where that we are expecting the things to take place. And guys, again, I've already told that if you have your insights, please share your inputs to the Q&A, or if you have a question, please take whatever question we Q&A. We'll keep on taking a break at every intervention, and we'll try to respond. Now, look at that. Some of this element of the any loan process, right, has largely been solved, and we've seen in the personal loan. For example, entire the account statement and analyzer, where that you try to understand the behavior of the income and expenses. You can easily do through the account aggregator purpose. Account aggregator still you can talk about that the majority of the banks has to come onto the register, but at least the trend is continue to be increased. So maybe in another year or so, mostly most of the bank will be in the place, and the customer base is also exponentially increasing where the customers are registered on the account aggregator. So that's anyways given that is going to sort it out in some way or other, right? I think Bureau is already sorted out where that you can fetch that beat on the individual side, or you can on the commercial side, you can do that. I think on the mandate side also being e-NACH or UPI is there, e-NACH which was there primarily for the credit debit card or the internet bank access through that mandate can be enabled. If not the UPI mandate, right? UPI mandate has also still yet to pick it up, but I think it's slowly continue to increase. So this is also sorted out, and I think it will continue to increase only. On the commercial side, on the business, these are primarily both across all the retail as well as on the business side, but primarily on the business KYC and all these things also getting sorted out. And not only the KYC, but income verification through the MCA data, GST data, the whole signing of the agreement, which was a major pain, right? Look at that any home loan forms that you pick it up, and then all the attached documentation aligned, at least it's becomes the 50 to 60 pages of the proposal document. And that whole 50 to 60 pages of the documentation that customer need to sign it up, that has been majorly being sorted out through the e-signing, where you either you do it through the Aadhaar or through the click mechanism or OTP based mechanism. That's been sorted out. And KYC, we know that through the e-KYC, video KYC, lots more. But what not has solved in the home loan, if you try to look at it, and where the major challenge comes into that, one is that legal verification. So like title verifications, right? If it's in a very old properties, then you try to establish the title verification for the chain of the titles transition that has taken place over a period of time. And that's typically you can only do it through that lawyer visiting that registrar office and trying to bring it all the title records, and then trying to physically verify and then prepare a report for the banks on any particular property. That's still largely unsolved, right? I think valuation. So valuation is also one is like gut feeling, but gut feeling that the lending doesn't work into that process, right? So you need to figure it out that what kind of the property is the value it holds. So you'll require a proven the valuer that you assign that this is a property. Can you help me to get the value for that? Okay. And then personal discussion has to be done, the technical discussion, the property verifications, again, which is very critical, where that you need to send some individual to verify the property, which is actually that property exists there. Against that which the customer is trying to take a loan, then taking a pictures of the properties in from multiple directions. These are like complex activities, which is very much physical in the nature. And these are all especially legal, valuation, PD, technical, that if you try to look at it, you need to start slotting along with the customers, right? It's like technical discussion or the PD, you need to depend on the customer, that when the customer is available, when your agent is available, then you try to do a kind of a technical arrangement for the technical or the personal discussion. And the documentation list can go on and go on, right? So for example, if the property is there, the property is there, then properties title records, then you will require documentation for the share of certificate. If it's a society kind of the arrangement, like say, for example, if you are buying a resale flat, then the whole NOC from the society is required. Then you need to have that share transfer certificate from the society to be required. All like that list can go on depending on the property to property. And then don't underestimate the risk of the fraud, because lots of the fraud can happen in terms of the valuation, in terms of the documentations. Lots of the misplacement of the documentation can happen, and these all things challenge the whole of the process to the TAT. Some of the home loans can go to 60 days because some of the documentation needs to be established. Like I'm talk about my experience when I was buying a flat in Mumbai. It was a second buyer from the builder, but previous guy have not taken the loan, so there was no architecture of the building available. So I need to go to the builder office to get an architecture to apply for the loan. These are the typical challenges. And the last not the least, but also you need to get the whole of the agreement done, where that you need to apply registry office, then you need to go, both the buyer and the seller need to be available, then agreement done, and then agreement can be put in place as a part of the proposal, and the sanctioning happen. It's a lot, right? It's a lot. So that's where the challenge comes, where the things has to happen. Is there completely a negative scenario? May not be, because of the fintech emergence, some tech startup emergence, some work has started happening in terms of, like, so for example, there is a startup available in the Velocity, which is trying to solve some part of the legal verifications, right? Or the valuation inputs that has been giving. The video PD, because of the video KYC infrastructure is already available, that's trying to sort lots that the PD can be done online. Then you have the landed. I think when Pezan talk about the sessions, he will try to talk a lot more about the landed, what they are trying to do that. And the one more very interesting things happening in the country, where that the title records are getting digitized, right? Within the state registration offices, where the government is trying to make sure that the current title records are get digitized, as well as the past, all the chain of the titles can be put digitization. Long demand, long goals, but I think lots of the progress has been made into that space. And with Pezan, when he takes up, he will try to give you a brief on that, what has happened on the SROs. So let's try to look at that whole of that housing loan market journeys, right? Typically, we try to plot. It will differ from the banks to bank. It will differ from the NBFCs to NBFCs. Fintech, some of the fintechs was trying to solve in the secured lending. Not much fintech has made an attempt so far into the fintech home loan secured lending side of it, but it will differ, right? So first, like say, for example, if you're downloading a mobile app, or if you're trying to apply through the internet, you'll do all the verification of name, mobile number, phone numbers, do the initial verification through PAN. Then you get to try to look at that whole of the consent part of it, where that complete loan process and the BU consent can be shown, and where the list of the documentation that you need to make it available to upload during the process. Most of the things will be available, right? Then scenarios, and this is where the entire process may change, like property decided or not decided. Property not decided, that primarily it will go and leave you to the sanction node. And once property has been decided, then you can come back and continue the journeys, right? But if property is decided and you just want to go to the sanction and then plan to actually buying the later stage, that also. So there is lots of the permutation combination in the process. And how do you handle this permutation combination very well in the digitally? That's where that whole thought process has to be applied through. And that's is not easy. That's why most of the banks you will find it are broken journeys. So that scenario has been discussed. Then your KYC process happened where the personal details have been captured, where professional details, say whether you're salaried, self-employed, and there also the complication will increase. That if you're salaried, if you are in what do you identified list of the what do you say employer, then scenarios differs. But if you're not in a identified the employer, then scenario may differ, right? So those are the challenges and combinations will come. Then you perform the KYC, e-KYC, the video KYC can be done. The KYC once it has been done, then income assessment or the bureau assessment will be carried out. Where now here that when the income assessment and the bureau assessment has been done, then you able to most of the banks, at least this part, they have been able to well sort it out that they're able to give you the sanction letter by paying a fee and all these things. Like say for example, Bajaj or say for example, any other NBFCs, you can find that the sanction letter can be immediately issued maybe in a half an hour times, right? So that's where some work has been done. Okay, I think somebody is raised and I'll come back to that. Now, once the sanction letter has been generated, and now you want to proceed that now you want to get the loan, especially if you have already come into the journey of the property decided, then your property assessment happen and need to happen. And that's where the tricky part comes, where that you need to get your legal verification for titles done as well as the valuation to be done, right? Now it will move to the technical valuations where that entire the verification to be carried out, like say, for example, personal, email, residence, the property verification, your residence verification. Then all the data which has been carried out, which was initially a preliminary assessment to give you that what kind of the loan that you can get against the property that what we are looking for or the loan that you are looking for. And then underwriting, the loan sanctioning approval, internal approval happens. Then loan offers get generated. Now, once you the loan offers, and here that whole of the process where that's largely that which is happened in the physical form where that agreement has to be carried out, all the submission of the documentation need to be carried out. Then only that repayment schedule and the dispersal happens, right? So this is like mostly your partially online and largely the physical journeys that we are talking about, right? Where some part has been KYC and all this thing can be done, but if it's in a physical form, then they typically try to do at the offline mode also. But most of the things remain in the physical forms. Then interestingly, that's I was talking about, right? We have not seen any fintechs making a foray into that secured lending. I think recent news is where that PhonePe has just recently launched the secured home loan product, and we just recent announcement is there. We'll try to see that what they have tried to do differently. But mostly it's being dominated where that some of these leading NBFC firm or home finance companies or the banks has been tried to do some sort of the digitizations, right? And definitely why you're looking for the digitization, because definitely it impacts every stakeholders, right? The customers, the employers, the business. And I think why the banks gonna put more focus, because if you look at it from the RBI direction also, they're trying to push the banks to do more of the secured lending, less of the unsecured lending, like personal loan or the credit card or kind of things. So that's where the bank's interest lies more, that they can try to do more and more optimization and the digitization in the home loan side of it. So let's try to look at the just in a step, and then I'll take a pause, and then we'll try to attempt few of the questions, like so what it can be changed and how it can be digitized, right? So first thing you need to figure it out that you can't digitize the whole of the home loan process in one go. It will take time because the industry has to evolve also. Lots of the innovation need to come in form of the SROs completely getting operationalized. Some of this valuations mechanism has to improve. Some digital mechanism has to come. So there are lots of dependencies, right? But what you can do, look at that where the intervention you can bring and where the tax can be reduced in piece by piece, right? That's where that you can attempt. What is your average turnaround time, and what are the impact that you can bring it out through those some of the digitization that you are looking into that? and how better that you can align that to your whole online and offline channels. Like, for example, very simple that I'll talk about that when we discussed in the process. Like, for example, if you're applying for a customer and taking the journey in your loan origination system, right, where that all the data has been compiled and calculated, and you're taking it through the underwriting process, typically what happened that whole the loan applications also getting physically prepared with all the customer filling up the physical forms, all the documentations getting printed and attached. And typically these documents are being shared with the legal as well as the valuer. But can you embed that whole of the journey with the legal and the valuer also in your part of the LOS? I'm just trying to create, suggest you the scenarios where that you can look into that, where that some of these components can be digitized and combination of online and offline can be done to provide the kind of a very ease of experience to the customers, and how you calculate your cost per loan as of today. And with each of the intervention, how you're reducing the cost per loan. So that's where that you start setting the context and you start building up. But it's not easy, but definitely that's where that we expect to see lots of more innovations. Okay, so typical workflow, and this workflow is I'm trying to show it is from the technology interface in the backend, right, where the bank's multiple technology interfaces are involved. Where first is the whole of the lead generation, and lead generation, can happen from the DSAs in terms of the physical or your sales agent, but also online somebody can come and apply, right, on your mobile phone, just an application, that lead. So how do you manage that whole of the CRM? And then you take it to the LOS, where the customer start filling the data, income details, the property details, so that at least you can manage that entire the flow and the valuation. So that's intervention happen LOS. And how deeply you are integrating the LOS with the CRM, because the customer may drop out at any of the point while filling up the certain information. So how do you can pick up that where the customer dropped out? How do you can pick up that what are the information the customer has picked up? How you can bring it and let the customer start from there itself, right? So that's where the origination and then sanctioning process through the business rule engine mechanism. And once the loan has been handled, then LMS takes care of it, right? So quick, I think I'll request Pezan to take care from here, where that he will talk about that what typically is happening and where some kind of the interfaces started taking place. Some of this thing already has spoken, but let me take a pause and see if there are questions or some inputs are there, then I'm happy to pick it up. I think Anil was raising his hand. Ajit, okay, so maybe I'll request my team to allow the Ajit to speak. And if you want to share your input, if any question, please go ahead, Ajit.
Yeah, thank you so much. Just a quick question. So you mentioned several stages of home loan process
Yes.
on a slide, which was, I think, 3 or 4 slides ago, wherein you showed the whole flow of how the lead comes in all the way to the disbursement of the loan.
Yes.
So the question I have is the cost, I think you indicated an approximate cost of acquiring the customer.
Yes.
But in terms of looking at these stages and the actual cost associated with these stages, where exactly do you see the pain point being the maximum? Is it in the data collection, the information collection part of it, or is it in the later part of the process where the innovation needs to happen?
So I think the cost is there across all the layer, right? You largely spoken about, but yes, some of the places where the cost is very high, let's say in terms of the documentation collections, where that typically you need to involve your sales agent or the office boys to run around and collect the documentation. That's one where that lots of the, like for example, I was talking about one of my recent applications that we were looking into, that 3 times the agent was coming and try to collect the documentation, right? Because documentation list. Then second is definitely your cost for the legal and the valuer, where that you have to pay the fees, right? That's where that you are engaged with the third party impaneled lawyer and the valuer. That's definitely you need to pay out the cost part of it. Then also the agreement, when you need to get that agreement done, where that human efforts has to be factored in, where that you need to go along with the buyer and the seller to see that the whole agreement has been facilitated. I think once it has been done, then I don't think once the dispersal has been taken care or the mandate has been collected, may not have much of the cost, but in the whole of the process. And Ajit, also you need to look at the cost not only from the one individual application per se, But it could be scenario that after collecting and putting all the effort, some loans gets through, some loan doesn't get through, right? Customer has
Yes.
taken the sanction approval, but customer didn't come back to buy the loans, right? So those are the factors as a huge, right? Some places, some banks have started collecting some initial fees also. Like, for example, customer is applying for the sanction. That time also they try to collect the fees because customer may come back or may come or may not come back. But at least your effort to
Right.
go collect the documentation and put through all the pain of journeys, at least you want to recover certain things. So that's
Okay.
where
One just quick associated question with respect to your drop-off remark. So the phygital journey that you mentioned which is still necessary in this home loan process. Some portion of our work still has to be physical plus digital, right? So in
yes.
the context of drop-offs, do you see that as one of the thing that we need to pay closer attention to in optimizing in terms of physical requirements? Because those are the places where customer gets to shop around.
100%, right? And that's why it's telling that when you try to look at the cost in holistically and then try to calculate your average cost per loan, you'll realize that largely it's also coming from the dropout. So you need to manage the definitely dropouts pretty well. Like say, for example, now most of the places the banks and NBFCs align the customer to get the sanction letter online, but to get the complete the whole of process, they need to go through the physical where that they will tell that customer that okay, I'm sending the agent, but they are not responding. They are not able to connect to the agent to collect the documentation. It means that they're intentionally trying to drop because they may be in the surfing mode that where they're trying to look at that which bank is giving them the better sanction letter with a better loan and better interest. So you need to really figure it out well. Some of the banks has also been able to sort out very well on that they know that where the customer has dropped, customer has taken the sanction letter, continuous changing the customer, enticing the customer to continue the journeys in the physical mode. But that's the challenge is there. So that's where that many of the guests will try to solve.
Okay. Thank you, Shashank. Appreciate it.
Thanks, Ajit. So before we continue, guys, may I request Sakshi to put a feedback form, guys. Feedback is always helpful to us. It keeps on motivating as well as it also allows us to keep on improving. So please share your feedback. Meanwhile, we'll continue to our discussion where that I hand over to Pezan, who's working with me to try to understand the home loan journeys better. So over to you, Pezan. I'll just switch off my.
Hi, Shashank. Thank you. Thank you so much. Thank you, everyone, for joining us for this session. Let me just share my screen. Yeah. So looking at the current scenario and the digitalization impact, so when we spoke about the entire process of how we've changed into different, so what are the current scenario when you talk about lead generation? So the interface for lead generation primarily was meant not in place for a digital journey. It was a broken journey. There were DSAs in place who used to get these lender interfaces, and they were the ones who were using it. The scope of digitization over here goes in a manner where we can create an API-based interface which can be implemented, extending the existing LOS platforms and for the capabilities of lending. So, yeah. Moving on to my application submission. So the manual data entries that will happen on the portal. As Shashank earlier mentioned that it was a completely physical journey where pen and paper forms of filling, the documents were really extensive to and fro, continuously it was happening. So what can be the scope of this is that we can transform it into an API-led data fetching where the documents for KYC can be fetched online. We can do a e-KYC instead of meeting the borrower in person. The property details can be extracted to platforms like Magic Bricks. Over here, Landed as a company who is a digitized SRO, it can help in providing documents and auto population of data fields can happen in the form itself. When we talk about document verification, there is a manual verification of documents that happen. Even when the documents are uploaded on the portal, even though that has happened, the manual verification, a person comes to you, visits you, looks at the document, checks your document, takes a copy of it and goes along, then uploads it. So it's a complete redundant process with a lot of duplication of documents that are happening over here. what we can do and what we can implement in our organizations or in our journey is an OCR mechanism, which can help quicken the verification process, e-KYC capabilities that can be extended to basically do the document level verification first, which can help in reducing the TAT of my entire journey. Moving ahead into the legal and valuation. So as we spoke about it, legal and valuation as an aspect is not yet digitized. There are multiple third party vendors also involved. So it's a very isolated process. It is outside of the LOS and the bank's complete architecture, the financial institutions' complete architecture. So we need an extension of the LOS interface over here that can be accessed by the lawyers and the valuers themselves. We can integrate this with the SROs, which will help in digitization of the entire process. Moving on to the underwriting part. So when we talk about home loans, there are two types of underwriting that happens. One is a personal underwriting of the borrower on basis of his income, his personal details, etc. That's the KYC underwriting and the income assessment that happens. Secondly is the property underwriting. So it's partially manual, partially digitized. Statements have to be submitted manual when I'm talking about my personal underwriting. The bank statement analysis does not happen. So there is no internet banking login, all of that. So what we can do is, and I will show it how we can do it, is that we can introduce account aggregators, we can start fetching bureaus, and we can integrate bank statement analysis over here as well. One major aspect that comes into the picture when we talk about sanction letter is that this issuance is currently done physically or via email. Sanction letters issuance are not done digital on the interface itself. It is a long process that takes a lot of time and efforts. Payment of processing fees right now, currently what we see is happening via NEFT or checks. But what we can do is the digitization, we can take it to UPI. As we all know, UPI is a much more adopted payment method in the country. And you can also have a direct deduction from my loan account for the processing fees as well. You can include that as a loan processing fee, loan amount itself. When we talk about my loan agreement signing, there are multiple signs that happen on each page. There are minimum 50 to 60 signs that you will undergo while you are having an application in place. So for that, we can replace it with e-signing. And right now, there is no submission to credit ops or loan dismissal happens. So what we can do is we can take the account details online for the final dismissal and set up an e-NACH over there. Currently, we've seen that all of us who have taken a home loan, or what we see in the market is there are checks that get signed as an e-NACH set for a setup of the continuous EMI payments. So what we can do is we can replace that with an e-NACH setup. Moving on to the digital sub-registrar officers. So let's talk about this. So the government over here has made significant changes where they have put in a lot of efforts to digitize these land records and property records. Basically, the main motto over here is to create this data should be more accessible and transparent. So we've listed down some statistics about the current state of the digitization at these offices. So for the availability of the land and the property records in the digital format, the government ensured and undertook initiatives, out of which that there are about 5,300 sub-registrar offices or SROs, as they say, out of which 5,034 have been computerized with the availability of internet. So 86% of the total SROs that exist in India are already on the cloud. So majority of them have been equipped for basically storing records on the cloud platform. So what happens is cloud storage helps us in ensuring that the records are secured. At the same time, they're easily accessible and can be updated in real time. 46% of the SROs are enabled with e-stamping, which is a very, very crucial step in reducing the use of physical stamps and also promotes digital transactions. And 46% of these SROs are basically very, very less prone to tampering of data and documents that are available for them. When we talk about SROs that are then in 17 states, 95% of the SROs are already digitized. So what happens? This extensive digitization helps in maintaining accurate and updated records, which are easily available to all the stakeholders that are involved in the loan processing, in the loan journey. And 88% of the SROs offer an option to search the land deed via web. So they provide online searches options for the deeds, allowing the users to verify the property details and the transactions online. So this feature mainly has significantly enhanced the user convenience, which also promotes a lot of transparency. So the digitization of this entire SROs is a very, very significant step to modernizing the real estate sector.
And Pezan, since you are there on this SRO, can you just also talk about the startup that we were talking about, Landit? What they are doing?
So Landit over here, Shashank, and everyone on the all of our attendees, Landit is an organization which is completely digitized these SROs. It helps in maintaining documents in a digital level. It's connected to all the states, and it helps the user or the borrower as well to extract information and extract data in a real-time basis. Moving on to the shifts in the market demand. So firstly, we all know that the market has been completely changing extensively. So let us concentrate on the first aspect, that the changing customer expectations. So today the customers, they expect a seamless and a hassle-free journey when they're applying for a loan. We all want digital platforms that help simplify the process. We want a quick turnaround time. We do not want to spend a lot of time on applying for a loan and waiting for the disbursal to happen. We all want digital platforms for loan applications and processing. So this is the first part. The second point is talking about increasing digital adoption. The growth of digital lending platforms has been pretty significant in the market. So these platforms, they leverage advanced technologies to streamline the entire lending process and making it much more efficient. Also, when we talk about the integration of India Stack that enables paperless and cashless service deliveries, it has further accelerated the adoption of in the lending industry. And lastly, the third point, we'll talk about technological innovations. So the technological innovations such as AI-driven models, they help the lender to make much more and faster and accurate lending decisions. So when you have an AI-based rule engine running, the underwriting process is automated and very fast, because it helps in enhancing efficiency and reducing the manual intervention, which overall leads to improved service delivery. Deep diving into each points, when we go about talking about customer expectation, changing customer expectations, let's first, what as a financial institution, the first question that we should ask is that what is it that the customer needs? Because understanding the customer need and the expectations is very crucial in this aspect. We have to gather insights as to what is that the customer values the most in their entire loan application journey. Secondly, what is the customer persona that we are catering to? So developing a detailed customer persona will help the bank in tailoring their services, also the communications to meet the specific need of the customer segment. As to, for example, if today I'm in the affluent range, also I'm stuck in a journey. For example, I'm stuck at the application process itself. My communication should be different from what the communication should do while I'm at the disbursal stage or at the KYC stage. Next, how seamless is my customer journey? Because ensuring that the customer journey is pretty serious is extremely vital for the financial institution. The bank should basically assess the process to identify and eliminate any friction points that are there in the journey. And finally, we also have to keep a check as to how many customers are onboarded through the digital channel, because measuring the effectiveness of the digital onboarding will help track the number of customers who can complete the entire process online through the digital channel itself. And we can help and we can understand as to what is the adoption and what is the areas of improvement, and we can identify that as well. When we shift to understanding the increasing digital adoption, we need to understand how we can collaborate with digital platforms, which can enhance the entire onboarding process and improve the customer acquisition as well. Secondly, we need to understand as to what are the internal touch points. So minimal the number of touch points, easier and streamline the process it is, and it will result into a reduced delay. Next, we talk about enabling e-sign and e-KYC for verification. We have to implement digital verification methods like e-sign and e-KYC in the home loan journey that can speed up the process and enhance the security while I'm doing it. And lastly, as I already spoke about, does the customer or the borrower know where is he stuck in the journey? Because providing transparency and keeping these customers informed about their status of their application will help us improve the entire customer experience. Just deep diving into this, we've seen that the growth of digital lending platforms has been very substantial in the market right now. So platforms like Basic and Home Capital, they're transforming the home loan process by offering online solutions that simplify the application and the approval stages as well. obviously the India stack has played a very, very significant role in enabling paperless and cashless service deliveries. So integration with Aadhaar, NPCI, and credit bureaus like CIBIL, they've enhanced the entire digital public infrastructure. And by adopting these tools and the DPI that's available in the market, the industry is better equipped to meet the growing demands of the modern consumer that's there and waiting for us. Talking about the technological innovations that are there in the market, we need to understand whether the current existing LOS and LMS that's there with the bank, are they tailored to cater to the mortgage loans? How can the workflows can be automated within the entire journey, and how can the analytics be used to generate insights into customer behavior and market trends, which help us in making data-driven decisions and identifying the new business opportunities. Lastly, what tools does each stakeholder within the bank who is involved in the journey can undertake and learn to enhance the efficiency and effectiveness of their roles? So here we are trying to identify the AI-driven models which help the lenders make more accurate and faster lending decisions. So improved credit scoring is achieved through AI algorithms, which not only take into consideration your traditional sources, data sources, but also alternative data sources, as we mentioned earlier. They provide a much more accurate assessment of the applicant's credit risk and then moving ahead into the fraud detection. So these AI models can help identify patterns and anomalies that are there, which help to prevent frauds and reduce losses. We'll come to the questions in a while. Just give us a minute, please. So coming to the automation and the process optimization tools. So these tools ensure that each step that's there is completed promptly and the stakeholders are notified automatically. There are players in the market which help and provide document management services, which handle the collection of the documents, storage, and retrieval of these loan documents, which help in improving real-time data accuracy and accessibility to it. And when we talk about workflow automation, it enhances efficiency by ensuring that the tasks are completed on time and in the correct order by notifying the respected stakeholders involved in the process. When we talk about the income assessment through account aggregators, so we all know the concept of account aggregators, but just to give a brief through, there are two kinds of entities that are there within the AA ecosystem, that is FIPs and FIUs, financial information providers and financial information users. So my FIPs would include my banks, mutual fund houses, insurance providers, tax and GST platforms that provide the financial data for a borrower. So when a customer gives consent to the account aggregator requests data from these FIPs. The end-to-end encrypted data flow ensures that the data is securely transmitted from the FIPs to the FIUs, and they manage the consent artifacts and the data access requests. So the FIUs, such as lenders, wealth managers, advisors, etc., that helps them to make informed data decisions. And talking about the use cases that come into the picture when we talk about housing finance. So this can be my loan portfolio takeovers, my credit scoring, going from customer identification, creating customer profiles, income verification, we spoke about that right now, cash flow analysis, customer upgradation, upsell opportunities to my consumers, because I'll come to know what is the kind of leeway he has in this finances. And we see that there are almost about 10 HFCs that are already live as financial information users on the account aggregator ecosystem as well. We would request you if you could please fill in the feedback form. Moving on to the...
Okay, guys, many of you are asking questions that whether you will get the recording of these sessions. Yes, in some time you will, maybe 2 to 3 days, you will find this recording available on our YouTube channel.
So talking about the customer experience and the pain points, let's take a very close look at some of the key struggles that we identified in the home loan journey. So these challenges highlight the areas where the traditional processes often fall short and underscore the need for a change. First of all, lack of transparency. Customers often feel that they are unaware of where they are stuck in the journey, how long is the process. So this lack of transparency leads to a lot of frustration and a poor customer experience. There is not also a clear document that states what are the requirements of document that you'll need from a borrower of the property. There are repetitive requests which creates additional burden on the borrower in terms of his time consuming, and there are unclear details. So customers need to know what exactly are the documents required, and they shouldn't have to submit the same document multiple times to different people and on different stages. Even though if you'd see we just saw that our colleague took a loan recently. We saw that even though the documents were uploaded on the portal, there was a RM who came and visited him, took the same documents again. Then again in the technical rounds, they took the same documents again. So same documents multiple times to different stakeholders, which creates a lot of duplication of data and a lot of confusion in the mind of the borrower as well. Thirdly, the point over here we're talking about is unclear loan details. So the rate of amount, the turnaround time as to how much time will it take for the loan to be disbursed and come into the account. The customers do not have a clear understanding of all these details. So it is a very inefficient process. The online and the offline touch points are often unaligned. They're not in sync. The customers might have to start their application online, but in midway, they might have to switch to offline processes, which leads to a very disjointed experience in the entire journey. So the customers often also pay processing fees without knowing what are the rates that they're being charged. So this can erode the trust of the consumer, and progress saving is one of the most important aspect, which is inconsistent all throughout journeys. So if I'm at the point of I have filled in the 3 pages of the form that I have to fill, and later if I break the journey over there, I would have to refill the form again. So customers are not able to save their progress and return to it, which they should have to be done. And there are very limited options that are there available in the market. The concept of one size fits all. Basically, this concept does not apply in the terms of the lending home loan market. Different borrowers have different needs, and the loan product should be very, very flexible enough to accommodate these needs of the customers. There are scattered touch points all around the customer journey which disrupt the entire journey. So a streamlined and a cohesive process is extremely necessary for providing a positive customer experience. What we see is that an average TAT is approximately 26 days for an approval of a loan, which is significantly long. Customers are expecting faster service. Secondly, repetitive verification from different stakeholders and in the various processes, and a lack of dedicated digital flow for self-employed people. So when we talk about digitization, so while digitization is extremely crucial, we need to note that it is extremely important to remember that digitization without the empathy for a customer is a wasted effort. So let us discuss why considering these customer pain points is essential during the entire process. We need to ask ourselves, is the customer journey fragmented between digital and offline channels? So it is very, very important that the transition that happens between digital and the offline channels is extremely seamless. A fragmented journey will basically lead into a lot of poor customer experience. So we need to understand that whether the customer is being also forced to use the digital journey, even if the customer does not want to, because not all customers would be comfortable having a digital process. So it is essential to provide options and not force the customer into just applying into a digital journey. If they prefer traditional methods, they would rather go with it. So going digital without thinking what the customer's pain point is extremely dangerous. Simply digitizing the entire process, considering that the customer's experience will lead to more and more frustration within the consumer, and it will break him off from the journey. So it is crucial to address these pain points and ensure that digital journey is user friendly. And we should only go digital while digitization is necessary, but it should be done thoughtfully, keeping the customer's experience in mind. Basically, this approach will help enhance the customer experience rather than detracting from it. So to summarize, empathy in digitization ensures that the process remains very customer centric and enhances the satisfaction of the consumers in the overall experience. So we spoke earlier about multiple scenarios. Shashank explained as to what should be the ideal TAT in a multiple scenario. So the banks need to ask, is TAT reduction a priority? So here are certain scenarios that we've outlined and we tried to create. So for a scenario like there is a pre-approved customer for a bank, and then the property that he is purchasing is pre-approved by the bank itself. For these customers, verification KYC is not needed. So by addressing these aspects, we can streamline the process and reduce the TAT. For new customers in pre-approved property, valuation and legal, because the property is pre-approved, is not needed, but the onboarding verification needs to be digitized for the new customer who is onboarding in the bank. The third scenario is pre-approved customers and new property, where the verification of the KYC is not needed, but we need to optimize the current process where the property that is being evaluated is digitized, and there are third-party players have an equal involvement into the bank's LOS system, which can help them digitize the entire journey. And last of which is a new customer and new property, where all the aspects will have to be taken into consideration, which will help us in reducing costs and reducing TAT. But the TAT should not be more than 2 to 3 days, because this will reduce the costs and significantly, enhance the customer satisfaction. So each of the scenarios that we're trying to highlight over here, it's basically targeted at improvements in verification, KYC, valuation, and the legal processes, which will eventually lead to a TAT reduction, making the entire loan journey more and more customer friendly and efficient. Moving on to the regulations aspect, the RBI came up with a master circular on housing finance on 2nd of April 2024. To give you a summary over here, it's specifically specified that RBI should only so it's specified by the RBI that the banks and the NBFCs, the HFCs, they should only lend to the person where you are purchasing or constructing dwelling units for repairs to a damaged unit. You are buying a second house for self-occupation or rental purposes. You are purchasing an old house which by the borrower who's presently residing there as a tenant. If there is a credit slum improvement scheme that's implemented by the slum boards and the other agencies, and obviously there are additions or repairs to the already financed houses. The exclusions over here that the RBI is very specifically called out in its master circular is that there cannot be any kind of loans that can be given for building offices just for government or local government use. But they can lend money for projects such as where NABARD or SIDBI will later refinance the project again. So banks should also avoid lending to public projects that aren't registered under the Companies Act 2013. Previously, the banks gave long-term loans to government corporations such as the state police housing corporations for creating their quarters, expecting that these loans will be paid back using government budgets. But since these projects weren't aimed at making profit, but rather providing housing for the employees, they don't fit the criteria what the banks would find to lend. So that these exclusions are very, very peculiarly called out over here. When we talk about the quantum of the loan, and the regulations, the loan to value risk or the loan to value ratio are very essential considerations for individual housing loans. So the RBI has called out that when an applicant is applying for a loan up to 30 lakhs, the LTV ratio of less than 80, the risk weight is 35. So for loans between 35 and 75 lakhs with an LTV ratio of 80 to 90, the risk weight is 50%. So it basically tries to state that if my property, so loan to value is basically how much loan can I get in accordance to the value of the property. So if my property is, for example, for 1 lakh, the LTV states that I can get anywhere between 80% or less. So 80 lakhs is something that I would get in this aspect. And when we talk about exclusions, so the RBI clearly states that stamp duty and registration and other documentation charges should not be included in the cost of housing property. But there is again a clause over here where the property should be costing up to 10 lakhs. It should not be, except for properties 10 lakhs and below, it's included over there. For the disclosure requirements, the builders must disclose mortgage information in pamphlets and brochures and advertisements. The builders cannot have to provide an NOC for the sale of property or flats if required. The bank's fund should not be released to the builder until and unless he fulfills the above requirements. And also the RBI circular very, very clearly states that the banks have to frame a comprehensive norm for real estate loans, including single and group exposure limits. So they have to maintain margins, security, and repayment schedules have to be approved by the bank. So these regulations ensure transparency and accountability in the housing finance process, protecting both lenders and borrowers. Thank you so much for being with us. We shall take up your questions very soon.
Yeah, I think we have one question. Are there any approvals required for video KYC? It depends from where the question is coming. If the regulated entities, you don't require any kind of approval to do the video KYC, right? You can do that. So it means that primarily you need to have the AUA, KUA certifications, which will require for you to integrate with the video KYC infrastructure, and you can do that. So it's not any kind of things a challenge. So for any regulated entity, through AUA, KUA license, they can use the video KYC. So that's there. I again request you to share your feedback. I already said there a question coming up that whether the recording will be available. So it will be available in 3 to 4 days, or maybe earlier on our YouTube channel. That's you can go to that. In fact, some of the sessions will be also be available on our FinTech Grid in the more details where that you can go and look at register for some of these programs through the subscription mechanism. So that's you can do that. And again, I think we have already crossed the time, but thank you all for joining and patiently listening to us. It was pleasure talking to you guys and sharing the knowledge for me and Pezan. So thank you again and look forward for the next knowledge session, which is coming again in the next Thursday. So thank you all and look forward to connect again. Thank you very much.
Thank you.